Good morning, everyone. Well, the dollar was lower across the board this morning as investors woke up to the possibility that not only might the budget stalemate drag on, but it could continue into the fight over the debt ceiling. That, of course, would be financial Armageddon. U.S. stocks were lower yesterday, while bond yields were also lower, and the implied interest rates on Fed fund futures continued to fall on the assumption that the political fighting will prevent the Fed from tapering anytime soon. In fact, it'll be almost impossible for the Fed to come to a conclusion on policy because so much of the data that it depends on, particularly the labor market data, won't be published. No government data will be released while the shutdown is going on, only private sector data. Now, with luck, the shutdown will be over soon. The median length of time is 3 days, the average is 6, and the longest ever so far is 3 weeks. So we hope that the data flow won't be disrupted for long. However, the polarization between the parties is worse now than it was in the past, and some of the Republicans apparently see this as a good chance to press even more demands on the view that the Democrats won't let the country default. But on the contrary, yesterday the president said he won't even negotiate at all until Republicans cave in completely and agree to fund the government and to increase the debt ceiling. So it looks to me like the stalemate's set to continue, further disrupting markets. Against this background, I think the dollar is likely to decline further, and the safe haven currencies, the Swiss franc and the yen, are likely to benefit. The euro should also benefit as an indirect result of the Swiss National Bank's intervention in Euro-Swiss. Euro is also benefiting today from yesterday's resolution of the Italian political crisis. And let me say, as an American citizen, that it's a sad day for the U.S. when U.S. politics look bad in comparison with Italy's politics. The economic calendar today starts with the European service sector PMIs for September, including the UK and Italian ones, and the final readings from France, Germany, and the Eurozone. The Italian service sector PMI is forecast to rise, while in the UK, the market expects no change. No change is also expected in the final PMIs for the EU, France, and Germany, compared with the preliminary results that we had a few days ago, but it's unclear whether economists actually prepare any forecasts for these final PMIs. Later in the day, Eurozone retail sales for August are expected to rise. And in the U.S., the data should be the jobless claims and factory orders for August, but they apparently won't be released because of the shutdown. So the only U.S. data will be the ISM non-manufacturing composite for September, which is forecast to fall to 57.0 from 58.6, another negative dollar factor. Overnight, the focus will be on the Bank of Japan, which will conclude a 2-day policy board meeting. Bank of Japan Governor Kuroda will hold a press conference afterwards. It'll be interesting to hear what he has to say about monetary policy in the context of the government's decision to raise the consumption tax. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.